Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we've been pointing out that it's turning out to be a stable day now after that intraday recovery that we saw for the markets, especially in the first 1 hour of trade post the news that came in on the additional borrowing reducing by the government. So that's what's keeping the markets afloat and steady. I have Prashant Nair back with me to take us through the rest of the show as well. Hi, Prashant.
Ekta, hi. So let's...
Missed quite a bit.
Missed quite a bit and back for the second half of the day, basically. So looking good, I mean, as far as the screen is concerned. Only thing is, and I think you must have pointed this out earlier in the show when we began, that advanced decline is still quite weak. I mean, 1365 stocks lower compared to about 680 stocks which are higher. So with that short comment, let me get in our guest on the show. Vaibhav Sanghavi is co-CEO at Avendus Capital Alternate Strategies. He's with us right now. Vaibhav, thanks very much. Good morning. It's always good to have you here. First up, just your thoughts or news on the government borrowing program and the change which has been made, and what do you make of it, and what impact it will have, what durable impact it will have, according to you?
See, I think the preliminary impact has been on the 10-year GSEC market, but in any case, we need to understand, why the apparent reduction in borrowing from 50,000 crores to 20,000 crores within a span of 15 to 17 days. Whether is it that the expenditure has been postponed to the next year, or is it something else, or probably we are looking at some amount of revenue surprises as well. So we need to understand the contours of that, and precisely after that we'll be able to make a a calculated judgment on that. Till then, we will await more data on that. But sentimentally, it has been positive for the bond markets.
Vaibhav, in your opinion, and thanks for joining in this afternoon as well, how much do you think the markets will be ready to forego when it comes to the fiscal deficit for FY18 as well as for FY19?
So I think, the whole street is between, 3.2 to 3.5 as a percentage of fiscal deficit. Now, on a broader perspective, I think we need to understand that, this is a year where we have a landmark, reform measure actually getting executed through the whole taxation system. And in that scenario, if we are slipping some amount of, on the fiscal side, I don't think the street will take extremely negative on that count. It is going to be extremely important that after the e-way bill, which is going to get implemented from next month onwards, the tax collection, whether they are going to stabilize from April, May or not. And if that happens, then I don't think that fiscal deficit for temporary purpose or temporary period slipping
That's the reason I asked you for FY19 as well.
No, precisely. So for FY19, I think we will have to wait. I think, the government projections in the tax receipts are going to be a little buoyant. So if that is the case, then the headline number might not appear to be, too way off, from what the street is expecting. And as I said, it is between 3.2 to 3.5.
I've got your views here, Vaibhav, and I want you to explain this. You're seeing sector rotation towards technology stocks, and you're saying it's basically a positivity coming as US economy is gaining strength. And it's a very straightforward kind of conclusion and makes sense. So first of all, which stocks, etc., are top of mind for you, which stand to benefit the most? Is it a broad sector play? I mean, tide lifting all boats kind of thing. And second, we've had very strong growth in the US for the last year and a half or so. And some expect that growth will hit a peak this year, that is calendar 2018, and actually start to trail off from there. So then, not fall sharply, but trail off, will basically peak out. So what impact will that have on that positivity? Go on, Vaibhav.
Sure. So I think, while we are speaking about US growth, we have to realize that US, along with Europe, has been on the upswing. In addition to that, the big tax reform measure, which has been, announced by the US government, actually will give good amount of disposable income for the companies to spend more on, creating more efficiency, and creating more efficiency would be hugely driven by technology. Now, we do estimate that the technology spend is likely to increase. And as I said, I mean, the Gartner surveys also shows that 50 basis points increase in terms of technology spends over the overall budget is pretty sizable. At the same time, what we also think that the large cap universe is the one which will stand out to benefit because they have a wider product suite to offer, the skill set to offer, to those companies which are going to spend going forward. So on an overall perspective, as earlier, which we had said that we were probably neutral to negative, this is a sector which we are, changing our stance at least for the next year and a half.
Vaibhav, we've got numbers from a couple of private banks. We've got numbers from IndusInd and as well as Federal. How did you read especially parameters such as asset quality, where there was a marginal slip? You can argue against it as well. But do you think that they're probably going to sustain these kind of parameters through the rest of the year? And your view on the same as well, private banks?
So private banks, we have been very, very selective in terms of what we go and take it on the portfolio. The two existing numbers are actually too early to call in terms of the broader, broader trends for the whole thing. But one thing we need to understand is the provisioning requirement as well as the GSEC yields, which we have shown, which have been pretty volatile in the last quarter, is going to have some amount of negative performance on their quarterlies. Now, in light of that, a quarter can be, a little iffy. However, in terms of the strong business momentum, I think we continue to remain very, very positive on the retail-focused private banks. You may see some cycle of underperformance, but on a lower or longer-term perspective, we continue to be, very bullish on that space.
Briefly, just one last point. You're saying you see more upside in metals and commodities. Could you specify? You're talking about steel mainly? Mainly steel. I mean, there could be others as well, but mainly steel?
Yes. So mainly steel because, it is more of a tactical play in terms of metals and commodities. And if you see in the light where China is curbing in production, sure. US, Europe and India are pretty much growing in terms of the economy. And as well the steel spreads pretty buoyant, we think there is some more legroom up in terms of the steel at least.
All right, Vaibhav, thanks very much. Appreciate you joining in. Good speaking with you today, as always. Thanks indeed. Look at stocks like GMR flying away at 24.5 or so, 7.5% higher. As we speak, the market's looking pretty okay. 33, 34 odd points in the green. 10,734 is where we stand. The sticky point is still advance decline. Declines far greater than advances. Almost 2:1 actually. We'll take a very quick break here. We focus on the big earnings which are due today, and we'll get you expectations. So 34 odd points on the Nifty. We're at about 10,734. Futures are at about a 6 odd point discount to the spot price. And some more. I mean, we saw GMR buzzing. JSW Energy is another one which is actually picking up a little bit of pace. Capital First, which had been selling off for 2 days. I mean, I think it lost about 10% in 2 days flat after the announcement of merger. And it's coming up a little bit, but that's essentially going to move lock in step with IDFC Bank. So that one is higher. This one is back at almost about 800 odd rupees or so. Capital First, that is. I think the other one is Jayaprakash Associates, which was selling off, which actually was down about 4% today, 3.5–4%. It's now up by about almost 2%, almost back at about 22 odd rupees. So that's a sharp recovery. We'll point out more. Let's shift focus to earnings now. We'll have numbers coming in from FMCG major HUL, and we also will have Z, which will report numbers. Let's get quick previews going for what the street is watching out for, just in terms of headline numbers, but also the nitty-gritties. Mangalam and Sonal are here with us. Mangalam, why don't you take us through HUL?
Well, HUL, the street is working with one of the best quarters that the company has posted in a fairly long time, and the stock price reflects that. It's at record highs ahead of the numbers itself. They have a lot of tailwinds for them. The first one, of course, comes from the fact that they have a formidable or much favorable base coming in year on year as well as sequentially. Last year, third quarter had demonetization. So we're working with a lot of positives going in. Through the course of this year, the company has launched its naturals products, the likes of Indu Lekha and Ayush across the country. So that is likely to bump up volumes And finally, we'll watch out for the international parents' sharp focus on cost reduction. Does that go ahead and improve the margin? So as far as what the street is expecting, a 10% thereabout revenue growth is what the street is working with. Numbers, 9,136 crores on the top line. But remember, as far as the top line is concerned, just watch for the 10% relative growth, because the absolute numbers may look different given GST and excise Ind AS reporting. EBITDA, that one's something we'll watch out for. 24% growth, 1,684 crore rupees is what we're working with, which implies a 200 basis points improvement in the margins. The net profit optically looks like an 11.5% growth. The number that we're working with is 1150 crores. But if you adjust for the exceptionals in the base, the revenue could actually grow. The net profit actually can grow by about 26.5%. Most importantly, the volume growth. We're working with 8 to 9%. Can the company go ahead and deliver 10%? If they do so, it will be the first time they do so since the fourth quarter of FY12. Let's see what happens.
Okay, all right, Mangdam, thanks very much for that. So just to put it into perspective, that bar chart indicated that the volume growth in Q3 of FY17 was a decline of 4%, and last quarter it was a growth of around 4%. So year on year, that 8 to 9% will be supported by that base effect on account of the volume growth as well. But the other one which we'll be watching out for quite keenly will be Zee Entertainment. Sonal is here to provide us with details on that. Sonal, if you could start by telling us what the ad and subscription revenue expectation would be this quarter, and whether there is a base impact that we're working with as well.
Well, Ekta, there is a base impact also in terms of demonetization, but also because the company had sports business in the base. So in terms of ad revenue on reported basis, we're expecting a growth of around 16 to 17%. But because now no more 10 sports business will be taken into consideration, 12% decline in subscription revenues is what we're expecting. So on like-to-like basis, we're expecting an ad revenue growth of around 17% and overall subscription growth of around 10%. So these will be the key numbers that we'll be closely watching. Apart from that, we'll also be watching management's commentary on the margins, because they had told us that they'll be able to maintain 30% plus margins. So that is another number that we are looking for. Also, there'll be some sort of increment in the operating costs because of higher expenses in the marketing segment. So that is another number that we are looking for today.
All right, Sonal, thanks very much. Again, a big number, nifty company. Keen interest in this bellwether, Zee as well. We'll take a very quick break here. I mean, the market's still up 32 odd points or so. We come back, we have more in terms of opinion that we caught earlier in the day. Back in two with that.
Well, finally, we are seeing some amount of green, formidable green on the mid-cap index. So we're up around 0.3% on the mid-cap index, and the advanced decline ratio seems to be recovering a tad bit now. So maybe the chart should come up for you as well. But a lot of result reactions. We've spoken about HUL, we've spoken about Zee Entertainment, but a couple of others include the entire Adani pack, which is coming out with numbers. So Adani Power should come up for you. That stock is a bit sluggish ahead of that. Adani Transmission is also coming out with numbers today. And tomorrow we will have Adani Ports and Adani Enterprises releasing numbers as well. Separately, the likes of Mindtree, Sterlite Tech would be a couple of broader market stocks to watch out for. But that's all the time that we have in this show. Thanks for watching. Halftime Report up next.